عامل ايه يعني كيفك بالهابي
Cool. Okay, looks like we're live. Hello everyone. Welcome to the now third event of the Solana Season Hackathon. Today we're doing a fireside chat with Jeremy Allaire, who's the CEO and co-founder of Circle, and Anatoly Yankovenko, who is the co-founder and CEO of Solana. This will be about a 30 to 45 minute conversation, really free form. If y'all have any questions for the speakers during the event, please drop all your comments on the right-hand side over there with your questions, and we'll take some time at the very end to try to address everything. I think since we're already 7 minutes over and we have 300 people in here, we're just gonna jump right into it. So I think, Jeremy, you really don't need an introduction, but if you want to take 30 seconds just to let everyone know who you are, and then Toly, I'll let you take it from here.
Sure. Yeah, absolutely. Great to be on. This is awesome. I'm Jeremy Allaire, as noted, CEO here at Circle, and have been building software platforms, tools, infrastructure, and other services in the internet space for almost 30 years, and really excited about all of the really amazing developer activity that's happening with Solana, and we're just happy to be a developer right there, building stuff on Solana as well with USDC. So great to have you. Great to be on with you guys.
Awesome. Yeah, everybody runs their own podcast, so I always get confused who is on whose show.
Yeah, totally.
So I kind of can you tell us about the kind of explosive growth of Circle over the last year?
Yeah, absolutely. I mean, just for perspective, for a long time, actually 8 years ago when we started, we were like, there has to be a way to be able to kind of take fiat and build digital currency models around it, do that as like an open protocol layer that could run on the public internet the same way we have information layers. That wasn't really technically possible until you had sort of the second generation of blockchains. And once that kind of came around, we saw that we could actually build like a protocol layer for dollars on the internet and eventually other fiat currencies and created USDC. Now, that kind of grew during 2018, 2019, but really starting last year, really actually quite correlated to the pandemic. We just started seeing incredible growth. I mean, I think when we started chatting with you guys about, working on something, I mean, it was maybe like 500 million USDC in circulation. So really in the last year, it's grown 30x. I mean, USDC,
there's
it's a lot.
500 million on Solana, on just Solana now.
Yeah, just Solana has 500 million. That's just in a few short months, right? So
yeah,
it's been amazing. So we've grown from 500 million in circulation to on January 1st there was 4 billion in circulation. We were pretty happy with that growth, but from 4 billion now to basically 15 billion in circulation now is really, really amazing. And so we're oftentimes adding 1 billion per week. So it's grown a lot, and just the on-chain transaction volume is well over 500 billion in the last year. And I think for us, we've been building out a broader set of stuff around it as well, which we can talk to if it's relevant. But I think the really important thing is we're seeing USDC brought to more chains, getting onto infrastructure where you can do retail scale applications, you can do capital markets scale applications. Other things are really, really exciting developments too.
Do you know what the main use case is driving this globally? Yeah,
I mean, I think at a high level, there's sort of like I like to describe it as like 3 waves of adoption. And actually, like if you go back and read the original white paper around the creation of USDC on center.io, we have a very broad vision of basically connecting every person, every business, every financial service everywhere using a set of common protocols for money. That's, and so when people ask me like, well, what do people use USDC for? What could it be used for? I'm like, well, what would you use $1 for? I mean, literally it should be, micropayments for a digital collectible that's, fractions of a penny to its collateral in like a bond issue that's happening on a blockchain, right? And it's everything in between. So, and in some ways, when you look at the uses of USDC today, we actually see that breadth of use cases. We see like these, very big, bulky kind of like capital markets type things on one end. And then, people doing really innovative things with like streaming payments for people who are employees that are getting streamed payments, and they're getting paid out in countries like Venezuela, Argentina and other places. And it's like innovations that are happening that are only possible with on-chain on-chain dollars in this way. So the use cases are broad, but when you actually look at it and sort of say, okay, where is the bulk of it coming from? Again, I look at it in sort of 3 waves of adoption. The first wave of adoption is, USDC as one of the really, preferred, settlement mediums for the crypto capital markets, basically. So basically, as digital asset markets have grown all around the world and have become mainstream, and as more institutional capital has come in to this as just an asset class and a market, having a reliable, trusted, always redeemable, dollar digital currency has been really important. And so it's grown very much alongside the growth there. The second, and so that's like the first wave, right? And that's where it started, and that's probably, it's got the biggest wave right now. I know you guys do a lot of waves and beaches and stuff in your metaphors.
I'm trying to love waves. Trying
to work with that here. And then the second wave, really was born out of innovation that was happening with on-chain protocols like DeFi, innovation. So, interest rate markets, borrow and lending markets, other kind of financial market primitives that are being built on chain has been a huge growth driver as well. So if you look at like USDC that's, locked in DeFi, contracts, it's really huge. And so the growth of DeFi has also been a really, really big driver of growth of USDC. And then so that's like the second wave, and it's not quite as big as the first wave, but it's growing really fast. And then the third wave is what I'll call is like generalized settlements. Like, and so we have, it's amazing, like how many venture capital companies are now making their investments with USDC. We have businesses, we have thousands of businesses who sign up for Circle accounts, which are like business accounts. And who are like, I want to use this for receiving payments or making payments or other things. So people are realizing that this is just a really great form factor for dollars and are adopting it. And we're seeing growth in things like USDC and in more mainstream like NFT marketplaces, which are bringing in new users who have never really thought of stable coins. So that third wave, which is more generalized payments and settlement, is sort of the smallest, but it's also, I think, going to probably over time grow to be as big or bigger than any of the others. And that's certainly our thesis.
Are the volumes at this point or I guess the numbers big enough that this is like unstoppable? Like, this is no longer like like an experiment? Like, are we past that point?
Well, it's interesting. Like, I think that the phenomenon of these like standardized, dollar digital currencies that are on public chains that have, regulated, kind of private sector financial institutions around them and so on, I think that's unstoppable. I think that's going to grow massively. I think it will grow eventually to trillions of value. And we look at it as, if you step back actually, and you look at M2, the M2 money supply, which is commercial bank money, which is, I call it ACH money. M2 around the world is $100 trillion. Okay, that's privately issued money, because banks are issuers of money. They create money, and they create their own form of electronic money. They have standards for interoperability. Some of those are okay, some of those suck terribly. But like M2 is $100 trillion, and fiat digital currency that is in this new form factor that is on the internet from internet-based financial services firms or internet finance companies like Circle, and many others like Coinbase and many others who are in the crypto space growing around the world. I think that, over the long run, I think this form of digital currency will eat share from M2. M2 is growing a lot because there's a lot of M0 and M1 being injected into the actual money supply. So like those numbers are growing as well. But yeah.
Yes. So when I think of adoption, when people say like, the sum of digital currencies that have been issued on chain is like, I think close to like 75 billion now. I should be thinking, okay, we're like 0.75% on the adoption curve. And it's just going to go to that.
Absolutely. Okay. I mean, and the other angle on this, and I know you guys think about this too, when you're thinking about like, how do you build, a blockchain for web scale applications, right? There's a lot of different measures on this, but like, there's probably like 150 million end users that are on blockchain, so to speak, that have, that hold crypto, that have wallets, other things, and that's growing. It's growing at a nice rate. But like, this is like, if you go to 1998 or whatever, when you were still in dial-up internet and it was kind of quirky and people were like, well, I see the value, but you kind of had to be into it, and it was it's a lot of hype. There's all this stuff going on, huge amounts of money, all this stuff, but like it was like 150 million people, and but was it going to be billions? Yeah. Was it going to maybe take 5 years? Yeah. So I think we're on a path to billions of people who connect to these public networks and then who want to use publicly available digital currencies like this. And so it'll probably take 3 or 5 years. But yeah, it should be quite larger by then.
Awesome. Yeah. 98 was an interesting time because I remember that as like when you started seeing like Friendster, like 6 Degrees as these applications that were,
I think that was even before Friendster.
Yeah, this was 6 Degrees was like
6 Degrees.
Yeah. And that was like, to me, like, wow, this is an internet only thing that can only work. Is
that like BitClout today or something? Like, every
human in the world has a token.
yeah. But right, like what is Dapper Marketplace or OpenSea, or you take these projects and you're like, oh, this is only possible because of crypto. It's only possible because of digital assets. It's only possible because of these public chains and what you can do. And but you're saying that, I might want to like sell my Beanie Baby on the internet, or that's interesting, but I don't really trust this, or this is too complicated, or I don't want to put my credit card in, or whatever those things were. back then, right? That we're in a similar place, and like the companies that are building services and applications, are there. A lot of these are going to turn into like huge customer bases. Some of them are going to totally die because they didn't innovate, or they didn't deliver real value to customers. But for sure, I mean, I think it's a good analogous timeline.
Yeah. I mean, I have like so much memory of that time as like kind of the world changing so rapidly, and kind of growing up myself being like coding as soon as I could figure it out. Right? Like,
were you using Cold Fusion back then? No.
I was.
You're too smart for that.
No, I was one of the nerds that was building Linux at high school, right? Like totally hopeless, right?
Yeah, totally.
I heard you call like or describe USDC as a bear asset. Is that correct? And can you kind of like deep dive into what that means and kind of like
Yeah. Well, so I mean, I think like in these constructs, right? USDC is a fully reserved digital currency that is issued by regulated financial institution like Circle, right? So, but the tokenized dollar it essentially is imbued with the characteristics of a digital currency, and so it. Once a USDC is a token on a blockchain, right? It inherits all of the attributes of those tokens, and those tokens, like a USDC token on Solana, is a bearer instrument. Like if you have it, you have it, right? And it once you've moved it from you've moved it from one address to another address, it's a final settlement, right? And so that's what in general digital currencies and digital assets are. They're bearer assets, and I think that's bringing some of the characteristics of cash and the characteristics of the internet, and some of the characteristics of traditional payment systems. But I think really taking those characteristics together is that like base layer. Now you have like regulations now that exist in most parts of the world, or all of the world basically now, where like if you're an intermediary and you're holding this on behalf of other people, or you're custodying this, like you have to be registered, you need licenses most places, you have to be meeting international know your customer and anti-money laundering and countering terrorism finance. Like there's a whole set of stuff you have to do, or you like go to jail or get fined, or who knows. But like so that now exists and is pretty uniformly being applied around the world. And so you do have intermediaries, just like banks as intermediaries, but the actual base layer is a bearer asset, and that's extraordinarily powerful, of course. And one of the things that makes digital currency, have such utility value.
And is that something, that concept, is that something that could apply to NFTs, to like securities issued on chain and things like that?
Yeah, I mean, I think like there's so many different forms of tokens, right? We have governance tokens of a DeFi protocol. The governance token is a unique thing, right? It provides governance. It provides certain financial features. You need to present it, to participate in voting, and those are bearer assets, right? You can transfer those, freely. I think when you start, NFTs themselves, yes, absolutely are bearer assets. Although I think people haven't yet fully grokked the connection between the actual digital material substance, the provenance of the origination of the NFT, and the connection between the digital material substance and the NFT itself. And so I think there's work to do there, and part of that is sort of the convergence of decentralized file storage and NFTs, and kind of, it's a different form of digital content and digital content ownership, but they are still, kind of these bearer assets as well. Like, but when you start bridging, like USDC, right? It is a hybrid, right? The market understands that there is a reserve of Federal Reserve dollars, if you will, or dollar assets that are there. Just like if you had a tokenized house, or tokenized ownership of some form of real estate, you could have that be a bearer asset for sure. Like if someone wanted to trade fractional ownership of the Mona Lisa, or wanted to trade fractional ownership of a piece of real estate, the token itself could be a bearer asset. I think there's going to be questions, yeah, go ahead.
So in my mind, like, I think the distinction is that, like, if I accidentally like transfer this token to like invalid address, it's gone.
Right. Exactly.
And that the issuer doesn't control effectively ownership.
Exactly. Right. So this is you're going to see a spectrum of situations, right?
Right.
So like, it's against the law with a corporation that issues equity securities in the United States. It is against the law, or I should rather phrase it as opposed to being against the law. It is a requirement that the company be able to reissue shares, that the cap table is a record. There's a legitimate form of what is a legal cap table. There's a legal framework, which law firms mostly hold these cap tables in their quote unquote records. And if there's shares lost, or the whatever happens, right, when shares are lost, you can reissue shares.
Let's hope that Google Doc is still available.
Exactly. Yeah. So I think when you're dealing with that kind of external legal fiduciary kind of framework, tokens that are issued, they lose some of the bearer kind of concepts. Now you could construct something legally where let's say you could come up with a fractional ownership of a building that was truly tradable, and like, you could construct something that said legally, if you lose this, like the pro rata, everyone just gets the value, who's the rest of the owners, or something. Like you could construct something legally where it could have more bear-like characteristics, but then that's still like an underlying financial contract that everyone agrees to. You agree to that. Yeah.
Got it. Yeah. These are things that, like, seems like DAOs, like you would have to, if you're trying to represent this as a smart contract in a truly kind of decentralized way, you'd have to carefully construct these rules into the contract itself. Yeah, very much. I mean, that'll be, I think progressive jurisdictions like Wyoming and Delaware, who are trying to innovate in terms of corporate law, and fundamentally, the forms of entities, these new sort of corporate forms, and how they can issue value and enable participation. It's a wonderful place for innovation. And it's something I'm particularly interested in. Yeah, likewise. I think, it's this seems like much more secure than a Google Doc. Much more robust.
I guess it does relate to, like, when I think about like what we're doing at Circle, we envision a world in the coming years where hundreds of thousands, if not millions, of businesses keep their treasury, like keep their working capital, keep their treasury in digital currency, and that more and more of the economic relationships that they have as firms are mediated by smart contracts on blockchains. whether it be labor relationships or trade relationships or equity relationships or other things. Like we really see that, sort of more and more of the substance of corporate forms will want to operate natively in this. And I think, a corporation is essentially, it's a token that has, certain voting rights, that has certain economic rights. And that generally that token governs a treasury. That treasury is a treasury of the tokens themselves and what flavor of tokens they are. And it's a treasury of financial, cash assets, dollar assets. And then there's like governance from the top that then determines who can actually do things with the dollars or whatever currency it is. And then it's a nexus of contracts, as people say, right? It's this nexus of contracts. And how can we have more and more of those contracts themselves become, dematerialized, or however you want to talk about it, turn into software, right? That has all these great characteristics that you can do on a blockchain.
Yeah. That's I'm trying to imagine a world where once these contracts have been kind of like bulletproofed, on chain, that Wyoming just says, okay, if you use this particular smart contract, you're a corporation. Don't even don't you get like a stamp.
Yeah, for sure. And like, look, like it's sort of like open source, right? Like people are like, okay, this build of Linux, like, you can use this to like run aeronautics on an airplane, or I don't know, maybe you don't do that, but like, people are like, it's got a certain level of hardness to it that, like, cause so many people have validated it in terms of its security or its efficiency or whatever. And that's clearly like, there's like a higher bar with smart contracts around that. But like, you can imagine, like, sharing economy is such an interesting place because, sharing economy business models disrupted labor relationships to platforms and service delivery and were really, really powerful. But like the next generation of that is going to get created, and it's all going to be on chain, and the labor contracts are going to be smart contracts, and you're going to know exactly what you're getting into. And as a labor market participant, you're going to be able to do that from anywhere in the world. And, it will probably create all kinds of creative, ways for value exchange to happen between someone providing a service and the actual delivery of that service. And I can imagine like really, really powerful suites of employment protocols that get built on chain that eventually are composable into all kinds of forms, right? That just makes so much sense that we would get to a world where employment protocols would be really popular and sort of businesses would be like, well, I'm just going to adopt that employment protocol because it gives me the most flexibility with people who work and collaborate to create whatever it is that we're creating.
If you were like a seed stage startup, not Circle, like if you were like, okay, I'm getting into the space, what would you build? Like how, like what do you like personally?
Like,
I guess
you want actual products.
Yeah.
Well, I have a lot of ideas for products, but I hope Circle builds them too.
Okay. So.
But I mean, what I would say is, and actually, it's interesting. My co-founder Sean Neville, who's very involved in the standards around USDC and is on my board of directors. Like, we talk about some of this stuff, and he's thinking about a lot of interesting things in the space. But I would just say, like, I mean, clearly, the nature of corporate form would be a legal DAO, right? Like that just seems like if I were starting a company or a project, I would absolutely start it as some form of legal DAO, not a classic Delaware equity corporation. And so just I that's definitely one thing I would say. And then really, the incentive design on how you can get people to collaborate with you, and participate in building intellectual property or whatever it is. You really can. There's so much room for experimentation there now. So I would be thinking about that. But now we're like an old crufty, company. It's hard to make those changes.
Yeah.
We're not that old, but
that's crazy how fast the space moves. If one of the fastest growing innovative companies in crypto is like, we're too old.
yeah.
Do you think that like the product cycle for this stuff is ready for like consumer level? Like are we ready like to get, like, we have a team building this awesome wallet, Phantom. I don't know if you had a chance to use it.
I have Phantom. Yeah.
Do you think we can get like normal humans to use this stuff? Are we at that level?
Yeah. I think that we're close. We're not there yet, right? We're just not there yet. I think one of the biggest missing pieces is identity, and I think I think for this stuff to take hold, there have to be ways for people to interact with decentralized infrastructure with privacy preserving forms of identity. I think that will be key. And part of that is that will be key to unlocking kind of mainstream scale financial access to this as well. But a lot of the applications have nothing to do with money, right? They're but I think just the hurdle of people needing to understand crypto in the sense of seed phrases and private keys and other things is too high a hurdle. And so I know there's some really interesting projects that have experimented with that to make it easier. There's smart contract wallets like Argent and others that are creating these guardian models and using other forms of multi-factor identity to instantiate a user experience that is easier. So I think we're close.
What is this like? What is the missing feature for normal humans that you think identity is useful for? Just identifying me as Anatoly, or recovery of my keys, or like?
Yeah, I mean, I think that part of it is to get DeFi and broader global interoperable kind of peer-to-peer payments, and just general payment acceptance. Like I'm Amazon and I'm going to start taking, USDC payments or all these things. Like when you start getting to mainstream scale stuff, like people want to deal with real humans, and I think the challenge is the legacy way of dealing with that is you create these closed loops. Like card issuers and credit card networks are these closed loops. PayPal's a closed loop. You Square is a closed loop, right? You have these kind of closed loops, but the public chains and public chain based financial applications, whether it's a peer-to-peer payment or lending money, borrowing money, all these things, they're completely open loop. I mean, but I think, it's not going to be acceptable to not have some way for like an Amazon to say someone is with a zero knowledge proof, proving to me that they are in fact a valid, KYC'd individual, but but I don't need to know who they are. I don't need them to give me their PII. But they can prove to me that, or a DeFi protocol that is accessed by like institutional market participants. They may want to basically say like, I want to be in a liquidity pool where I'm cryptographically proving using zero knowledge proofs in some form of identity at a station that I'm interacting with other institutions. I don't need to know who they are, but I'm interacting with them. And the same thing with like on a DEX or like a Serum DEX as an example, right? It's so powerful. Of course, like eventually, like if you could put tokenized instruments on there, like hedge funds would all love to trade on a decentralized infrastructure, no counterparty risk, all this sort of things. But like from a legal perspective, they're going to want to be able to have these various forms of proof. So I think that's a key piece that's needed. That also can be applied to like simple ways to like, enable different digital wallets to share value with each other without having to like give out your identity handle, but still know that like each user has been KYC'd and stuff. So I think this is an area where there needs to be new standards that work on public chains that then can unlock and make things more usable.
Austin, you said there's some news that broke.
I just wanted to jump in here. So Jeremy, this kind of broke while we're on the call. It doesn't have to do with Solana, but it's really cool. I wanted to get your opinion on this live.
Yeah, sure. Yeah.
It announced the Circle to team up with Tala, I believe it's pronounced, to work with Visa to help get crypto payments adoption in emerging markets. I'm gonna drop the link in the chat. Do you just kind of want to expand on this? It's really cool.
Yeah, no, absolutely. I mean, basically, Tala is building a whole, a whole payment system, or not even a payment system, but a payment application experience that leverages USDC as settlement in a wide range of emerging markets. It's attached to, so USDC is used throughout. It is attached to Visa credentials as well. So every Tala wallet holder has a Visa credential. And so I think the really important thing here is, and this is part of the work that we started with Visa when we announced our partnership with them in December, is they're really interested in a world where people can like make payments to people all over the world using USDC. And then the people who receive that, and especially in like emerging markets where people might not want to hold a local currency, they're more interested in holding, a digital dollar, can then still use it, right? So if I'm in Argentina, and I have a Tala, wallet, I can receive USDC from anyone. I can send and receive it as well, peer to peer, and I have it attached to a Visa credential, so I can make a purchase online, or I can go to the restaurant down the street, and I'm essentially paying with USDC, but it's actually the Visa network that is handling and facilitating that. So instead of like traditional, this is a lot of like these crypto-based debit cards and stuff, right? So instead of a bank account, it's just USDC, and now Visa's taken a step further, which is basically the Tala wallet, which is the users holding USDC. They present it to pay at the restaurant in their country, and then that Tala actually can settle with Visa with USDC itself, instead of like needing to like convert it back into legacy fiat and get it through like the Swift, ACH, all that stuff. They can just be like, Visa's like, no, here's my USDC address. At the end of the day, just send me the amount of USDC you owe as well.
So is that API to settle with Visa via USDC, is that open to anyone, or?
It is not, meaning like it's something like, and there was an announcement earlier, Crypto.com is actually, setting up and doing this as well, which is basically like the issuer of the card, which is, let's say it's Tala or it's Crypto.com or whatever, the issuer of the card, you know, they're getting an instruction as to like, you know, where to settle. And like in the VisaNet system kind of orchestrates these IOUs, right? And so typically you'd get like, you know, wire funds to this bank account or whatever. And like you'd wire those funds, and it would like take T+3 or whatever, and eventually the funds would get there. And so there's like these legacy fiat settlement paths. But now instead it can just be like, you know, multiple times a day, like, okay, there's this much USDC, send it to Visa as USDC, which is pretty cool.
Yeah, that is really cool. And it's like when the next baby step seems like issuing those IOUs on chain.
Yeah. Well, yeah, absolutely. Well, I mean, I think it's also like, you know, all these wallets that you know are all over the world that are being innovative. Like people can pay each other, obviously, with USDC, and then businesses themselves, you know, can, you know, open up a wallet and just take payments directly, right?
Yeah.
And that's obviously really something that we see happening a lot more in the coming years.
Is a bank account required to work with this?
By which participant?
The user. So if do you need a bank account in order to like get into this program, or could you?
No, this is the beauty. It's like you can get a Tala wallet as a user in one of these countries where it's available, get it through the App Store, and then you get a Visa credential that's attached to it. You get a virtual card. I think they're doing a physical card as well. And like people can like send you, you know, digital currency, and then you have it, right? But
you can effectively take credit, right? You have a credit account with Visa that then you can sell with USDC. So my Tala wallet, right, is a credit card in a sense.
I actually I don't know if the Tala is. I think Tala is. I don't know that it's a credit instrument.
Okay.
I think it's a debit instrument. It's more like you know, I'm, you know, someone either sends me money, or I've managed to purchase digital currency and then put it in this. Yeah. It's like if you open up a checking account, it's empty, right? There's nothing in there. And so you need to get funds into it. This is like opening up a digital currency account, and then, you know, you need to get, you know, maybe you're working on a token project, and they'll pay you in USDC.
Yeah, this is pretty cool. It's the stuff like seems like it moves at a glacial pace, but I think every one of these steps opens up like I think 1,000 new doors.
Totally. I mean, it's like you know, like a year ago or whatever, a little over a year ago, like we used to keep track of like exchanges that had USDC and that also had local currency. So effectively you could get from USDC into like, you know, whatever, Brazilian real or whatever it was. And like just in the last year, that's exploded, right? They're like exchanges that offer services to people in 200 countries, where those exchanges have USDC support and they have local currency connectivity in like almost 30 different currencies now. But what does that mean? It means like there's basically like a settlement path to get from dollars to these, you know, to local bank accounts and local currencies in all these places. That just happens organically. Like we didn't go do deals with anyone. It's just like people connect to it. And I think that's just the start, right? There's gonna be more and more and more of that. And then people build abstractions on top of that and be like, oh wow, like I can get funds to an Indian bank account in like 3 minutes, or whatever that is. It's super cheap with almost no FX, and by using these kinds of settlement paths. So I think there's a lot of more work that will come to build on all that.
I mean, to me, it seems like obvious that any system today that's using USDC that has KYC, once merchants start accepting that as credit cards, they can they can send the USDC they have on credit for the user, and then deal with like settling with the user later, right, at some interest rate.
Yeah.
Like all of a sudden you have like a
Yeah, that can happen. That definitely can happen.
Yeah, that's super cool. Like it seems like I wouldn't be surprised if like the entrenched like visas of the world get blindsided by this much faster than they think.
Yeah, I mean, this is the thing. Like, the whole beauty of all of this is the open internet. This is public protocols. This is developer innovation. This is happening, with people who are creating and building on this as open technology. And like, it has multiplier effects. It has compounding effects. It has all of these network effects. And there's so many degrees of freedom for people to build that things, when you see all that kind of happening together, like things can happen really fast. Things can actually happen. I realize like it feels glacial sometimes, but like, things start to happen and people are like, where did that come from? I think right now, like banks and financial institutions are looking at things like USDC and they're going, where the fuck did this come from? Like, I thought this was just this toy thing that was like, over here. But I think people are waking up that this is here to stay.
In your mind, is decentralization a critical component of this? Like some fundamental, does the network that it's running on have to be decentralized?
Absolutely. I mean, I think it's sort of like, is decentralization important to the internet? Like, it is the essence of the internet, right? The IP like is a decentralized, IP, right?
Right.
It is the essence of it, and it has to be that way. It has to be resilient from any control, from any corporation, any government. It needs to have that level of decentralization for it to be broadly useful to humanity. So I view it as deeply foundational. Like, if the underlying infrastructure isn't decentralized, then we're not making progress. And then there's obviously apps and services and other things on top of that are going to be on a spectrum of decentralization. But the underlying protocols like Solana, as an example, right? You guys are making great progress in building decentralization on your network, and I think your architecture is designed to ultimately achieve a great deal of decentralization based on HPC and bandwidth adoption, and like that's critical. It's just really, really critical.
That's great to hear, because well, we're like deep in the trenches, like connecting Ethernet cables. And sometimes you gotta understand, like, is there a point to all of it?
Yeah, absolutely. Yeah, I mean, one of I know we're going to wrap up here in a minute, but like one of the things that Dante Disparte just joined Circle as Chief Strategy Officer and Head of Global Policy, and he's amazing. You should chat with him sometime. But he and I have been talking about really like, it's time to educate like government leaders around the world that actually like decentralized blockchains are strategic, right? They're strategic even from a national security perspective. Like, this is really critical for this to be decentralized. You need infrastructure that's resilient from nation state attack vectors, that is something that is not controllable in many ways. That's actually beneficial, even at that level. I mean, we could go long on that topic, but
yeah, I mean, if you have like cryptography and fault tolerance and censorship resistance, and your financial systems runs on top of that, you can't. It's really hard to hack all of it.
Yeah, we're dealing with the legacy record keeping infrastructure and fiduciary infrastructure and so on. There's security around it, but it's got so many flaws in it, and flaws that really affect society and fundamental civil rights and other things. There's just so much there. So there's a lot of work to do, but I'm cautiously optimistic, as I always am, about bringing along policymakers to actually realize like this is ultimately just a better world that we're building.
On that note, like it's really awesome to have you, like to join us
man.
this chat. I hope the folks listening to this are inspired. Like, go build the next corporate structure, like smart contract engine. that would be awesome. So yeah, if you're building stuff that has to do with USDC, like you have your own ideas for like a non-token like equity startup, like just reach out to us. Like,
yeah, reach out to Circle 2.
Yeah,
we'll support you.
Yeah.
Absolutely. Cool. All right, great to hang out. Great to chat.
Yeah, thanks, Jeremy. I think with that, you can also submit that project to the hackathon. Jeremy is one of the leading judges, so we can definitely fast track there and make sure you get some initial funding. I think real quick for everyone watching, because this worked really well yesterday, we dropped Jeremy's Twitter link in here. Everyone go follow him and post a screenshot of Twitter, and then we'll give like 1 or 2 t-shirts away to some folks. So he needs to get 200 some followers, or else no one's getting
All
it.
right, I need it. I need it. All right.
But thanks for joining us, Jeremy. This was really awesome. We appreciate you taking the time. And thanks
you're welcome.
Thanks for watching.
Cheers.